Okay. Okay. Now we will begin our courses. But before we begin our courses, I will to remind you the class guideline that you can see at the description of WhatsApp group. Okay. Now I will present our class guideline first. Let me share my screen first. Okay. First one, all classes will be conducted online by Zoom. The Zoom link will be shared by the moderator in WhatsApp group one day before the class. Participants are required to fill out the attendance form for each session, and the attendance link will be provided at the beginning of the class. Please make sure to read and adhere to the class rules. Okay, for the class rules, please log into the virtual classroom at least 10 minutes before the session starts. This will allow time for any technical issues to be resolved and ensure the class begin on time. Attendance is mandatory for all sessions. Please make sure to inform the course organizer in advance if you are unable to attend any session. Active participation is encouraged. Please contribute to discussion and ask questions when necessary. Your engagement will enhance the learning experience for everyone. Keep your microphone mute unless you are speaking to avoid background noise and distraction. Unmute only when you need to ask a question or participate in a discussion. It is highly recommended to turn on your camera during the session to create a more engaging and interactive learning environment. Keeping your camera on also help instructor monitor participation and ensure that everyone is actively involved. Uphold the highest standard of academic integrity. Plagiarism, cheating, and other forms of academic dishonesty will not be tolerated. Use the chat function respectfully. Please keep comment relevant to the course material and avoid distraction. If you have a question, you can type in the chat, and the instructor will address it at an appropriate time. All sessions may be recorded for educational purpose. By attending the session, you consent to the recording and agree that it may be used for future reference by the course organizer and participants. Maintain a professional and respectful tone when communicating with instructor and fellow participants. Avoid disruptive behavior and respect diverse opinion. Ensure that your device is fully charged, your internet connection is stable, and your necessary software Zoom is up to date before each session. If you encounter technically difficulties, contact the committee promptly. Submit all assignments on time as instructed by the course organizer. Late submission may affect your performance evaluation. If you have any concern or require assistance, do not hesitate to reach out to the course organizer. Your feedback is valuable for improving the course experience. Okay, now we are ready to begin our course. Over the few days, we will delve into various aspects of mathematics, quantitative methods, Islamic economics, and also Islamic finance. Led by distinguished experts in the field, This is a unique opportunity for all of us to expand our knowledge and network with fellow professionals. To kick off the first session, I would like to introduce our speaker, Dr. Wahyu Jatmiko, who will lead presenting on constructing the Murabaha facility within a truly Islamic finance architecture. Awards, distinction, best dissertation, Master of Sciences, Islamic Finance, Durham University Business School, best overall academic performance, Master of Sciences, Islamic Finance, Durham University Business School, best performance, Master of Sciences, Islamic Finance, Durham University Business School. And for bachelor degree from Faculty of Economy and Business University of Indonesia with dissertation Sukuk Liquidity in Indonesia and its impact on yield charts, and gets cum laude award for cumulative GPA 3.64 out of 4. Okay, please welcome Dr. Wahyu Jatmiko from University of Southampton.
Right. Thank you very much, Mr. Luki. Can you hear my voice?
Yes, of course, sir.
All right. Thank you. Well, yeah. Hello, everyone. So, right. It was a very generous introduction, of course. My name is Wahyu Jatmiko. You can just call me Wahyu, and I'm very pleased to be here. This is my very first time to participate in this esteemed event. I see a few of my colleagues as well as my guru actually here. Of course, especially Professor Nafriana, who's kindly inviting me to join this event. Thank you very much for the opportunity. And then I'm to, I mean it's a pleasure as well to actually open this this event in the sense of giving the introduction here in this international virtual course about mathematics and quantitative uh, methods for Islamic economics and finance. To be completely honest with you, my background, as Mr. Luki has explained, was not in math nor in statistics. But of course, when we are talking about research, we are talking about Islamic economics and finance, of course. We need those two tools to actually advance not only the knowledge, but also the industry. So that's why it's compulsory for us to engage more with the mathematics and statistic in order to advance the industry, as I mentioned before. So I'm lucky. I will only quote unquote introduce the the sessions, right? And then I'll give the difficult parts to my colleagues who will presents their knowledge later on in probably tomorrow and the days after tomorrow. So please let me share my screen. Sorry. Bear with me for a minute. Yeah. Right. Yeah, can you see my screen already? Yeah.
Yes.
Okay. Right. So in the next almost 2 hours, I'll try to actually discuss with you all about a very basic of what is Islamic finance, and then the roles of academic research in advancing this field, right? I understand many of you are still in undergraduate degree, but I believe you have heard about Islamic finance, about the basic of Islamic finance. It's always good to have the whole understanding about the academic research underpinnings this field, this Islamic finance field, so that you can have a good understanding in regarding the subject matter. So in the first session, I mean, I'll probably divide it into two parts. The first is about the Islamic finance, and the second one is about research underpinning Islamic finance. For the first part, I'll talk about institutional background, current progress, and of course, the gap between the ideal and practice. And then we'll move towards the gaps in the current Islamic finance research and literature, and then role of mathematics and statistics, as well as my opinion about how to, synchronize the theory and practice in Islamic finance, right? And then feel free to, raise questions in the middle of my presentation. I'll happily, address them if I can. But I will also give you chances to raise your question between the sections, the first and the second, and then at the end of the session as well. So plenty of time for discussion, given that 2 hours of our time today. So now let's talk about the institutional background of Islamic finance. But this is my first engagement with you guys. How would you describe Islamic finance in your own words? You can raise your hand to speak, or feel free to share your answers in the comments. I'll be happy to actually hear your voice or see your comments, please. 1 minute, 2 minutes, probably. How would you describe Islamic finance? Yeah, I'll have one here. Wahyuning Murniati based on Islamic rules. What is based on Islamic rules? Any other answers? Matthew manage money with the moral principle of Islam. Yeah, we have these Islamic rules, and then the second one, we have moral principles of Islam. It's very good. Thank you, Matthew. Any other opinion? Yeah, we have plenty of people here. Okay, Safarani Wardah Hidayat, financial transaction that goes along with the Islamic law. Okay, we have rules, moral, and law here. And then Ning Jauharatul Farida, manage my money based on Islamic rules again. We have now Diki, Islamic finance is a financial system that operates in accordance with the principle of Islamic law or Sharia. Is quite comprehensive answer. And then Gantina here, adhere to the Sharia, Muhammad Zaki, transaction halal goods or transaction halal goods or managing it. It's good, very, bring about something new, which is the transaction of halal goods, right? So in the sense that we might not be able to do Islamic finance, even though the structure is in accordance to Islam, for instance, Islamic law, but the goods that we are transacting is actually not halal. We cannot finance the casino, for instance, even though we finance the casino using murabaha, right? A very good answer here. I think Islamic finance is the usual financial mathematics, but with more of Islamic rules. So it is not considered as riba. So Wilbert say more of Islamic rules, meaning that more constraints, right, into the financial mathematics kind of thing, right? Very good. And in fact, later on we'll learn that and being Islamic, sometimes giving more constraints, more restrictions, right, to be able to avoid the prohibitions in Islam. Of course, one of them, Wilbur has said, riba, right? What is riba? We'll talk about it later, but I'm sure many of you have heard about this term before. And then we also have Nabil Nasrullah finance that complied with the Sharia. So yeah, thank you very much. I think your feedbacks are pretty much um, giving us the impressions and first impressions is Islamic finance. That we are talking about now, right? So if we try to decompose, right, the terminology, we have finance there, and then we also have Islamic there, right? When we are talking about finance, of course, it's a established field. I mean, as compared to Islamic finance, of course, you know, part of economics, some may argue, but it's a study of money management, right? Be it in the micro level or macro level, be it in the very small, like individual, when we are talking about financial independence, etc. Or we're talking about financial intermediaries, right? We have banks there, we have insurance, we have this and that, until we are talking about public finance, when we are talking about the deficit that the country has, the debt that the country has, right, the obligation or the bonds that the country actually issue, etc., right? That's, we are talking about the general umbrella of finance, right? This is the study of money management, be it in their individual level until the state or country level, right? So the objective is quite simple, actually, even though it's not really simple to achieve that. How to make the resource allocation efficient and effective, right? How, for instance, if you have plenty of money, surplus of money, that you are not spending yet this money, so you can put that money into someone else's pockets in order to get return from there, right? So this is resource allocation. On the other hand, if you don't have sufficient money, be it for production or for consumption, right, you need someone else's money, right, to do that, right? So here you have this kind of deficit versus surplus money, and then how the two can actually meet in the equilibrium, and then the one who deficit can be satisfied by borrowing or by being an entrepreneur, right? Whilst the one who surplus can still grow their money by lending or by investing, right? So this is, we're talking about finance. But when we are talking about finance here, it's something that pretty much, if you like, it's not neutral, but there is no set of like a moral system that embody in finance, right? So as I mentioned before, it is pretty much all right for you to, for instance, finance the casino, for instance, or it's pretty much all right to develop like a very advanced financial instruments, right? That at the end of the day, it leads to financial crisis, right? Because the finance itself is easily detached with the financial sector, sorry, the real sector of the economy, right? So the idea is that finance should be the derivation of the real sector of the economy. But what happened since 1980s, finance was, growing very, very fast until it's itself detached from the real sector of the economy. We call it financialization, right? But what about Islamic finance? We put the term Islamic there, right? As mentioned by many of you in this comment section, it's a study and practice of managing money, but we put a little bit more constraint. We load values there, principles there into the way we manage our money. Remember, it's not only about individual, but also state, right? So this is how we can have that principles or ethical value. We derive that from the Islamic sources of knowledge, which is, of course, the Quran, Al-Quran, and the Sunnah, right? So this is the primary sources of knowledge. Even though the derivation of that, you have later on ijma, we have later on like a qiyas, right, or analogy. You have later on this and that, which is fiqh, which is the derived knowledge. But the revealed knowledge coming from the Quran as well as the Sunnah, right? Of course, not all of the modern kind of transaction are mentioned there or ruled there in the Quran and the Sunnah. That's why you need like a fiqh, right, to derive the Quran and Sunnah into the modern kind of rulings of transaction, right? So the objective is pretty much completely different actually. I mean, you might suggest that this is also the objective of conventional finance, but without a certain, moral or ethical values, you might not be able to do that. You might not be able to achieve this, which is the just and equitable resource allocation in line with the higher objective of Islam itself, right? Or sometimes we call it the maqasid al-Sharia, right? And then the very distinct feature between finance and Islamic finance is that in Islamic finance, we have one-to-one backed by the real sector of the economy, meaning that one transaction in financial sector has to be having like the underpinning transaction in the real sector of the economy, right? We'll talk later on about the many contracts in Islamic finance. All of them, right, ideally are backed by underlying transactions, right, in the real sector of the economy. So it guarantees you there is no such financialization, meaning that there is no detachment between the real sector of the economy and then the financial sector of the country as well. So that is the basic idea of Islamic finance, right? You might recall that I did not mention deliberately about the rule or law there. I prefer to use principles and ethical values of Islamic finance, right? Because sometimes, not sometimes, uh, you know, when we are talking about the ethics, it is actually beyond the rule itself, right? Just an equitable resource allocation is there as our ethics and principle, not only the rule of the game, not only the law itself, right? So the law and then the rules, they are there to actually serve the ethical values of Islam itself, right? So this is pretty much the Islamic finance, right? If you can see here, so sure how to, yeah, probably, yeah. You can see here, this is pretty much the the aggregate concept of it. Of course, Islamic finance is part of Islamic economy, right? Some say that Islamic economy is something that oxymoron, right? Some say it would be better to say Islamic moral economy, because the economy there needs to be loaded by a morality that comes from Islam itself. As I mentioned before, those morality, those ethics, etc., they come from here, the sources of Sharia, the sources of Islamic finance itself, knowledge of Islam. It comes from the Quran, Sunnah, Ijma, which is the consensus of the ulama or the Sharia scholars. And we also have the analogy and ijtihad, right? The reasoning, of course, is there, right? So the instrumentalization of those kind of concept coming from mainly from the prohibition of this should be riba, not only interest, right? And speculation and gambling, which is goror, right? Even beyond goror, right? Which is maisir. But also, we are talking about the prohibition of investment or engagement with sectors that are sinful, for instance, like alcohol, financial betting, like porn, tobacco, in the sense of Islamic finance, of course, etc. Right? So those the assets of Islamic finance, again, I mentioned it, needs to be backed by the transaction in the real sector of the economy. That's why when we are talking about, for instance, bonds, right, we cannot actually, it doesn't satisfy Islamic principle because it is not backed by the real sector of the economy. The claims is not from the real sector of the economy, but from the obligor or the one who issued the bonds itself, right? And then you also have this muamalah contract, of course, in the sense that the classical contracts that mainly used or primarily used by Islamic finance institution, right? Even to the one that is used in Islamic finance institution are actually not a classic one, in the sense that they are sometimes or most often a hybrid between one contract and another contract, right? For instance, if you are talking about the murabaha, right? Of course, murabaha is there, the contract where the banks actually say to you, this is the acquired price of this car is actually, for instance, 100 million rupiah, and then I'll sell it to you with a price of 150 million rupiah, right? There's 50 million rupiah of profit there. This is pretty much murabaha transaction, right? Where the buyer actually knows very well about the how much profit that the seller actually get, right? But in banks, it's not only that transaction exists, right? Even in murabaha transaction, not only that part of transaction. It also consists of the muajjal, for instance, where you actually buy it not on spot, but at deferred payments, right? Or at installments, at a credit, right? That's another contract in Islamic finance. You also have in the beginning of the contract wa'ad, right, or a promise that you will actually buy the the goods, right, or the car itself in our case, right? So the one that is there in Islamic banking and finance is pretty much like a hybrid, not only coming from one contract, but also from other so many contract actually, right? Intermingle into the contract that we are we having now in Islamic banking, especially, right? So this kind of the concept is there in Islamic finance. I'm sure many of you probably have learned about this, just refreshing it a bit. So in conclusion, the instruments can be different. The first one in Islamic finance, it is pretty much value laden, right? There's a value there, right? Even though that value, we can also talk about that value from the perspective of economic rationale, right? Not only from the religious perspective, right? But we have value that we would like to impose there in the way we manage our money, right? Whilst in conventional value, it's a value free in a way, right? And then the contract mainly it's going to be profit and loss sharing, right? This is again, we are talking about the ideal concept, whilst in conventional finance it's mainly interest bearing loan, right? Then the claims there, you have the equity and asset centrality is there, whilst the conventional finance is claim of that. The rating, if we are talking about the S&P triple A rating, it's in Islamic finance should be assessing the underlying assets instead of the obligor or the issuer of the sukuk, for instance, when we are talking about sukuk. And then in terms of the law, it's not only positive law, right? In every jurisdiction has its positive law, be it in common law, civil law, etc. But you also have the Sharia law there when we are talking about Islamic finance. That's why sometimes you will see the competing kind of or differences between Sharia and positive law. You need to negotiate between the two so that the product that you offer in the market will not really the same as the ideal product that you intended to actually make, right? And then the Sharia governance is there. In Sharia bank, you have the Sharia supervisory board, for instance. When you issue sukuk as well, you need to be having like a Sharia certification as well. So that means there is a different layer of governance, right? Additional layer of governance that coming from the Sharia governance. Of course, it needs to be free from riba theoretically, as well as free from goror, the two that widely mentioned about these instruments, right? Now, what is riba that we mentioned before, right? Of course, in the literal meaning, it's like an increase or growth, riba itself, right? In the previous, I mean, in the classical riba is exposed, meaning that it's a riba jahiliya. Probably you have heard about it. When I, for instance, have loaned from my from my friend, right? The loan is due this month, but I couldn't actually repay the loan. I asked to my friend to delay, right, the repayment, and my friend say that okay, I can delay it, but you need to pay it more, right? Instead of, for instance, 100 million 100 million rupiah that I borrowed before, I need to pay 125 million rupiah, for instance. So there is 25% increase in my repayments because I exposed for the respite of the payment, right? So this is pretty much riba jahiliyah, right? It's not predetermined. What happens today is like an ex ante riba, in the sense that the riba is determined from the beginning, meaning that when we are going to the conventional bank, for instance, we ask for a loan, right? From the beginning, the contract says that, okay, we will give you loan 100 million rupiah, for instance. You will repay it in 1 year, for instance, and then the interest is going to be 10%, meaning that in 1 year you pay 100 million rupiah plus 10 million rupiah in excess, right? So the excess, we call it riba al-fadl, of course, because there is an excess there. The nasi'ah, we call it the delay, we call it the riba an-nasi'ah. Of course, sometimes we need to go into details when we are talking about this riba nasi'ah and riba fadl, but the idea is that if it's like a riba with goods, right, you cannot delay it if the genus is the same, right? For instance, if you do like exchange money, right, rupiah with ringgit, for instance, it needs to be on the spot, right? If you delayed it, right, even though there is no issue with the access, right, the different, 1 ringgit equals to 3,000 rupiah, for instance, that's fine, but you need to do it, exchange it right now. Otherwise, it's going to be a riba nasi out there, or delayed riba there, right? So it comes from a very, a fundamental prohibition that is mentioned few times in the Quran, right? Even in the Quran, the this injunction is one of the God and his messenger declared war to those who actually still engage with riba, even though riba has been prohibited by the Quran and the Sunnah, right? And so that's why this is gonna be very it will be categorized into one of the big sin in Islam itself, right? So this is just the technicality of the riba coming from, in the classical definition, coming from few goods or kinds of goods or types of goods, right? Including the gold, silver, which we consider during that time as a currency, right? Then you also have debts, wheat, salt, etc. Barely there, which we consider as like a the non-durable goods, right? That is primary for the what you call the primary needs of the people during that time, right? So this is the detail of it. I'm sure you can actually go through them yourself. But the idea is that it's going to be categorized as the currency for the gold and silver. That's why money that we have now is categorized under this types, which is gold and silver, right? But different currency, even Bitcoin, if you say Bitcoin as currency, it's gonna be considered as different kind of goods here. Gold, say US dollar, and then IDR is gonna be the silver. If we're talking about the IDR and ringgit, ringgit's gonna be a gold. You know, IDR gonna be silver, etc. So the idea is like that, right? And then we also have Goro there, which is actually the sieve or fog the mind. It involves the absence of knowledge regarding the transaction that we have, right? It only prohibited if the first one, the Goro portion is significant, right? And then the second one, it is fundamental, right? In the sense that it's not something that, you know, derived from the transaction. If you're talking about buying a ticket fare from Indonesia or from Jakarta to London, for instance, there is an embedded insurance there, right? Insurance, by definition, conventional insurance, many have categorized this as goror, right? But when you buy flight ticket from Jakarta to London, you you yeah, it's not a goror. Why? Because the main transaction that you would like to have is actually buying the flight ticket rather than the insurance itself. So the insurance is just derived from the primary transaction, so it's not fundamental. So there is no goro there. And then it does not imply greater harm if prohibited, right? For instance, buying like a watermelon, for instance, in the market is a bit goro because you cannot actually see inside the watermelon itself. Or buying a house, for instance, it's a bit goro. You cannot see the foundation of the house. But if you see the foundation of the house or the inside of the watermelon, it's going to be harmful for the seller, right? So that's why it's not goror if it's if you know, if erasing this goror, it's not prohibited goror if if erasing the goror will, you know, invite greater harm, right, for the transaction. And then the last one is it is occurred in tijari transaction or in the commercial transaction rather than in um, non-tijari or tabaruat contract or transaction, or you know, charitable transaction, right? That's why if we are talking about insurance later on, it's not going to be goror. Why? Because the insurance by construction, by business model, they use this charitable, you know, contract scheme instead of the tijari one, right? So this is, you know, if you like, the fiqh, you know, of riba and goror. But as a financial economist or as an economist, you would ask why riba is prohibited from the perspective of financial economics, of course, or of economics in general, right? So a few papers talking about this, right? I just, you know, summarize few of them. The rationale can be from the Islamic, from the financial economist perspective, can be the expropriation there of the wealth by the lender, of the wealth of the lender by the borrower, or the vice versa. We are talking about this as the agency cost of debt, right? So if you're talking about that, so many literature have actually tried to understand the conflict between the borrower and lender there. There is a tendency to actually satisfy their self-interest, lender as well as borrower, right? It makes the debt contract is actually costly, right? So for instance, there is so-called rifting, for instance, where for instance, if you have the mortgage and then the value of your house is you know, went down, for instance, the value of your house went down, to the extent of lower than your obligation, your repayment, your mortgage itself, right? So there is a tendency, like a rational tendency, for you to actually just going default, right? Because of what? Because your equity, your value of house is lower than your obligation. So why you need to actually maintain your stake there in your house, right? So this is, we call it shifting. We shift the risk over to the lender, right? Of course, you will say that, oh, the lender can then get the borrow the assets and then sell it to other party, auction, etc. But it's still costly, right? So this is the expropriation from one side to another. This is one of the possible explanation why riba from the financial economist perspective is prohibited. And then when we are talking about that as well, the ribawi facilities convey a lot of fragility to the economy. When we are talking about the global financial crisis, for instance, we are talking about this kind of very much sophisticated innovation in the financial industry based on the interest-based transaction, right? And then even we cannot see again the attachment between the financial contract and the real sector of the economy, as I mentioned before, right? So 2007, 2008, 2009, what happened is global financial crisis, right? It's the issue was that severe. It affected a lot of households, right? In the sense, the injustice here is that the banks, right, they actually privatized the return, but socialized the the risk, right? When it comes to the risk, the taxpayers' money were used to actually bailing out the troubled banks, right? But the bank itself, because they are private, the profit, they'll give the profit to the shareholders, right? Not to the society, right? So the risk are felt by the society, but the return only obtained by a very few shareholders that they have, right? So this fragile debt, right, is embedded in the financial industry right now. So that's why, because no back-to-back, real assets, so it becomes very much fragile, right? So this is just what I mentioned before. There's like a risk shifting going on. I won't go too deep on this cuff. Someone said about Tapera. Okay, I mean, yeah, Dr. Lukman will have his own session talking deeply about Tapera, inshallah. And then a Gorer part, right? When we are talking about the Gorer here, the rationale from financial economist perspective is actually asymmetric information and trading in risk. Of course, asymmetric information is something that cannot be, erased 100% as per Gorer. Gorer cannot be erased 100%. Even like a few presence of Gorer a little presence of Gorer are fine. The Gorer that is prohibited is actually the excessive Gorer, right? As we mentioned before, by fiqh as well. So in the asymmetric information, we are talking about how actually the information is asymmetric. The information that is so the information is not symmetric between the, for instance, seller and buyer, or lender and borrower, etc. Right? So as you know, the lemon kind of a paper by Akarlov, one of the Nobel Prize winner as well. So they're talking about this. If you have asymmetric information in the market, right? For instance, the used car market, right? The seller will assume that, sorry, the potential buyer will assume that something is being hidden by the seller, right? The seller hides something about this particular car, right? So what the rational, rational reaction of the buyer gonna be reducing the expected price of the car, because they would penalize the price of the market price of the car with the expectation of the you know uh, un undisclosed damage of the car, right? So because of that, also the good car, right? The seller of the good car, the good car, but the used but the good car, they do not want to enter the market. Why? Because market is so much underpricing their their goods, right? They use cars. So the at the end of the day, what happened is that the market doesn't exist, right? Why? Because it collapsed because of the asymmetric information, right? So this is pretty much the issue in finance, right? The asymmetric information is one of the market frictions, and market friction is costly. To be able to efficiently conducting the market, we need to actually, as much as possible, erase the asymmetric information, alleviate this asymmetric information, right? The trading in risk also there. When you are talking about the short selling, for instance, it's trade on risk, right? You're not trading on anything, you're trading on risk, right? Short selling is where you actually borrow your friends, borrow your friends stock, right? And then you actually sell their stocks, right? In expectation that later on in 1 month or 2 months, the stock's price gonna be down, right? And then you later on, when the price is lower, will buy it and then return back the money to the one who lent you the stock, right? Sorry, return back the stock to the owner, right? Then you literally have no need of like a capital, right? But you can get lots of money from there, right? But of course, this is trading on risk, right? What about, I mean, in the capital market in the first place, who can actually predict the market, right? Except Warren Buffett, of course. But the price itself, we 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 do not know, right? Even when we are talking about Nvidia, for instance, right? Stock, right? We always expect that it's going to be going up, going up, going up, but a few days ago, right, it collapses, right? um, that also happened with Tesla, for instance, etc., right? The technology kind of firm, right? So of course, this short selling, the concept is there, right? But it's it's a grower in the sense that you do not know exactly actually what will happen in the future, right? That's why it's the trading based upon your unknown, or the risk is the trading in risk is actually considered as grower. So this is the financial perspective, or financial economics perspective on grower itself, right? So yeah, I think I need to see. Okay, right. So I think the last one in this introduction of Islamic finance is because it's almost an hour I'm talking, and I will give the time for you to talk, any one of you to talk after this. So that's why, because of different kind of conceptual moral values arguments in Islamic finance as compared to conventional finance, it is plausible to have different kind of contract, right? Different kind of product in the market, right? It's even, it is not only plausible but mandatory to have different product. Otherwise, it's just going to be the same as the conventional one, right? That's why in Islamic finance industry, they propose so many different products, right? Unfortunately, with Arabic terms and many of Arabic or non-Muslim, for instance, they're a bit scared with even Muslim who's quite skeptical with this Arabic terms going to be scared to learn about it, but we are where we are, right? It's like that right now. For instance, in investment contract, we have the so-called mudoraba and musharaka. Mudoraba is when you have two parties. It can be more than that. Two parties. One is actually the investors, and then one is the entrepreneurs, right? So pretty much the classics investing kind of thing, right? And you have also musharaka. Musharaka have lots of times, right? The simplest one is when you actually have money and your friends have money, you have like a joint venture, right? To actually conduct or invest together into a particular project, right? So this is pretty much investment contracts. And if you can see from there, the consequence is going to be in the profit and risk, or return and risk, right? You have profit and loss sharing there, because in musharaka or in mudoraba, for instance, the investors cannot say to the entrepreneurs that I want to have 10% return, I mean, 10% of my capital, like in 1 year. You cannot do that. You can have like expectation, but the actual return gonna be following the actual cash flow during that period, right? So this is pretty much completely different with the the concept of interest-bearing loan, for instance. And then you have also trade-based contract, sale-based like murabaha, right? I mentioned before about murabaha or salam. Salam is where you actually got, you actually got, as a seller, you got money, in advance, right? And later on, you will deliver the requested or the ordered goods, right? This is very much important for agriculture, for instance, right? And then you also have istisna, right? Like in the constructions, for instance, where the delivered goods will be delivered later on, but you can pay in the beginning in installment, right? Or even later on as well. So this is something that is there. You also have the lease contract of ijara there, right? So it's just like a rent. You rent a car, for instance, you pay for the rent of the car. Then a contract of security like a kafala, hawala, rahan, and then other contract like wadi'ah, like what I said before. And court is actually just the what you call Qardul Hasan is just a usual loan, but interest non-interest bearing loan, right? Zero interest loan, right? You also have the wakala, right? It's an agency, right? You also hiba, ujur, etc., right? So, but what I'm trying to say is that the deeper consequences of Islamic finance contract, it will shape different structure of the financial instruments. In consequence, it will have different risk and return, and will have different payoff, will have different pricing, right? So this is like a big consequence of the Islamic financial contract. That's why what happened here is that the math guy is very much important, has have a very huge role in this industry. Because of what? Because the pricing needs to be different, right? You cannot only have like okay, this sukuk, right? The issue is sukuk, and then the return is gonna be just like previously we have LIBOR. Now, for instance, Bank Indonesia repo rate, for instance, plus 0.5%, for instance, or plus 2%, for instance. You cannot do that, right? Oh, why? Because again, the structure is different, should be different, so that the risk and return is also different. The payoff is going to be different. Hence, the pricing should be different, right? Later on, we'll see how the industry progressing about this one. I'll just be very much quick, but before there, I'll give a chance for Q&A if there is any.
Okay, thank you, Dr. Wahyu. Now we have a question and answer session. Anyone to ask for the previous session?
No questions. Okay, I mean, hope you're not sleeping, but
There is a question, sir,
yeah.
in the chat.
Okay, so
What
yeah,
are the challenges and opportunities of standardizing Islamic financial practice across different regions and jurisdiction?
thank you, Dr. Gantina, for the question. It's always be a challenge, right, to standardizing Islamic financial practice. Even this is why, because as many studies mentioned, our Islamic financial industries are so-called prohibition-based industries that comes from fiqh. And then when we are talking about fiqh, there are so many different kind of mazhab, right? Mazahib, or what you call the school of thoughts, right? In Islamic law itself, right? So if we still depends on the fiqh, right? That's fine, but the consequences, it will be very much difficult to have standardized Islamic financial practice, because for those who have traveled to other part of the world, right? And then for instance, just for instance, here in the UK, right? There is a possibility of arbitrage for prayers here in the UK, for instance, right? I mean, the consequence also the possibility when you are fasting, right? The time can be different depending on which madhab that you are following, right? For instance, now in the UK we're still in the summer, but our you know our Fajr prayer time is actually around almost 4 a.m., but that's one mosque. Another mosque have 2 a.m. for the prayer, Fajr prayer. Because of what? Because this different methodology in determining the prayer time, right? Of course, I mean that is for the case of ibadah, but because we are talking about fiqh, the derivation of the Islamic finance mainly comes from the fiqh. So those distinctions in different forms will happen as well in Islamic finance, right? Now in Indonesia, for instance, we do not allow inna, for instance. Our friends in Malaysia allows the same, right? Inna, even though, of course, Malaysia is now going away from that, position, right? But by fiqh, it's allowed in Malaysia. Tawaruk, for instance, we Indonesia do not allow tawaruk as a regular transaction for regular transaction. In the Middle East, in the UK, they permit the use of tawaruk, right? For many reasons, because the leader of the school of thought says it's okay to have the tawaruk, right? So the challenge is there. The opportunities, meaning that it should be that you have lots of innovations there, right? But if we want to have a standardized Islamic financial practice, because I know this is very important. Why? Because our world is very much interconnected, right? These uncertainties will make Islamic finance not appealing from the mainstream perspective, right? Because there was a case of Dana Gas to cook, right, in Abu Dhabi, right? When the Sharia scholar of Dana Gas to cook, change, the new Sharia scholars deemed that the issued sukuk is not in compliance of the Sharia. Can you imagine that? So the previous, Sharia scholars say, okay, this is in compliance, but they changed then the Sharia scholar, and then the new Sharia scholar say this is not in compliant, right? So in the sense that it nullifies the contract, right, from the Sharia perspective, and investors were very nervous. What will happen with my money, right? So this kind of thing needs to be handled in order to be a major industry, right? So that's why in the beginning, I always mention about the value of Islamic finance rather than the law of Islam itself. So the driver, I would suggest, my position would be, should be the maqasid, the objective of the Sharia rather than the Islamic law itself, right? So among the different kind of opinion, which one will give the best maqasid Sharia, will achieve the best maqasid Sharia, right? Now it becomes, I mean, we can determine what do we mean by the best, right? In terms of social, economic, etc. And then with the help of our Sheikh ChatGPT, Sheikh AI, then we can actually calculate, obtain so many information and then make a decision making, actually. So I think we can actually converging into one equilibrium, if we would like to actually open, right, in terms of innovation, etc., right? So yeah, that would be my position on that question, right? Hope that helps. I think there were a lady raising hand,
Yeah.
Aura Salsabila. Yeah.
Aura, can you unmute your microphone?
Oh, yeah. Is my voice clear enough, Doctor?
Yes.
Oh, okay. Uh, it's my honor to ask you directly, Dr. Wahyu Jatmiko. So
Hello,
I'm
Aura.
Aura from hello, I'm from ITB. My question is about trading, as you mentioned before. I'm just curious that is like something like trading, investing in finance companies, Bitcoin, etc. Uh, is it based on financial Islamic financial? Is it allowed or prohibited? Because it's still confusing for me because some of my friends say it's allowed, while others says it's prohibited. So I'm just still unsure about it. That's my
Yeah.
question. Thank you.
Okay. Thank you. Sorry, Aura. Is it? Are you specifically talking about Bitcoin or cryptocurrency or other financial
Or
assets as well?
I think in general.
Okay.
Like,
Right. Thank you. Yeah. Yeah. So, first disclosure. I'm not a Sharia scholar, so this is the opinion that I have is actually an opinion of to the best financial economist, probably not Sharia scholar. So if you would like to have a fatwa, then come to me. You can ask, other, of course, more knowledgeable ustads or ulama. But I have my own what you call observation on that, right? So in general, financial institutions, of course, it depends on whether you are talking about Islamic financial institution or just conventional financial institution, right? For like lay people like us, it's, I think, my personal opinion, it is okay to just follow the the opinion of the established what you called Majlis Ulama or established, fatwa makers, right? MUE in our case, right? It is okay to do that. If you have a little bit more knowledge, you can actually then examine whether you will depart from the opinion of our ulama in Majlis Ulama or etc. Right? Of course, if you do have the necessary knowledge for that, right? But to answer your question, um, the fatwa is quite clear. If you're talking about bank, for instance, you invest in banks, stocks, for instance, the conventional banks, you cannot do that, right? Why? Because obviously, when we are talking about equity screening, probably a later session we'll talk about it. Just in general, equity screening, the bank, the conventional bank or any conventional related financial institutions are excluded from the Islamic equity by definition. They engage with riba, right? And the same goes through for like tobacco company. You cannot invest in jarum that in terms of Indonesia. The same goes through you know weapon corporation for the purpose of peace, etc. Alcohol, bintang, for instance, you cannot do that, etc. So those are a prohibited industry. But if you are talking about, oh, can I invest in Bitcoin, for instance, or the cryptocurrency, right? Investing in cryptocurrency or Bitcoin, right? There are so many fatwa on this. The fatwa that I'm follow is you can. It is permissible to invest in Bitcoin or other cryptocurrencies because because al-aslu fil ashya is mubah, right? So the default of muamalat is actually permissible, right? So there is no such kind of stark injunction that applies in Bitcoin. Probably you will say that it's very much volatile, right? But the same goes through to the equity market, right? Equity market, when you are talking about technology company, for instance, they're very much volatile, right? So volatility of the Bitcoin or cryptocurrency for investment, meaning that you do that as your means of investment, that's all right? But it might be different when we are talking it as a currency, right? So as a medium of investment or currency, right? As a currency, many things, it needs to be considered, right? Many say it is not permitted because each country has its own regulation for currency, right? Yeah, that's right. Yeah, but I think from the Sharia point of view, um, you know, regulated regulation is not a prerequisite of a currency to be deemed as currency, right? So it's more about whether these things as a currency, the name indicates, the currency means that many people use this and then consider this as currency. That's it, right? If they do that, it's a legitimate currency from the Sharia point of view, right? But the question, of course, we always talk about when we are talking about Islamic finance, the money should be backed by commodity or by something that have intrinsic values, right? Including gold or silver, for instance, right? So as per now, cryptocurrency do not have these kind of features, right? So probably if it's legitimate from Sharia perspective, I think it can be legitimate, but is it ideal for Islamic finance? I don't think it is as as the current form right now. So to make it clear, again, my disclosure, I'm not a Sharia scholar that you can follow, but from my position, I think it will be perfectly fine if you would like to invest in Bitcoin or cryptocurrency, but you need to know the what you call the consequences, the volatility, etc. But in terms of currency, many regulations in national level have prohibited this type of currency to be used as as a medium of transaction. So in that sense, we follow the positive law in the sense that all right, it's fine for now to not using it as a currency, but for investment, I think it's perfectly fine if you know the consequences. Wallahu alam. Right. Okay. Any other question before we move on?
Hmm. In chat there is a question.
Hmm?
The first one from Amar Aiman, is tawaruk and commodity murabaha is the same product? If not, what is the difference?
Yeah. I think they are the same. For me, they're the same. The community murabaha is, I mean, tawaruk is community murabaha in the sense that, I mean, we'll talk about it later. I will have a slide talking about tawaruk, right? Okay, can I just read myself, Lucky? Yeah. So, from Iza, as explained earlier, the concept of Islamic economy is very good, so that no party feels disadvantage. Why is the practice of Islamic economics still less popular among the Muslim community itself, especially in Indonesia, which is dominantly Muslim? Oh, this is a very important question and very difficult question to answer because I think the aspects are very, you know, multidisciplinary, if you like, multi aspects, yeah, multi dimensions, right? So of course, one might hypothesize that this is because not sorry, the Islamic financial institution fails to offer like a distinct, unique solution to the conventional finance. We can test that in research, of course. You know, there are few, I think, you know, survey that back these arguments as well. Some said about the literacy because you know, only I think 10%, if you find 100 Indonesian, only one of those sorry, only 10 of those know about Islamic finance, have heard about Islamic finance, right? It's been increasing, but you know, it's as compared to conventional, which is around even I think more than 50%. So it's still very, very low, the literacy of Islamic finance itself, right? We partly can be blamed actually. Why? Because we put you know, quite technical kind of terminology, like as I mentioned before, like the terms all in Arabic. People, it brings like a barrier for them to easily learn about the Islamic finance itself. The third one can be about the positioning. We position as the halal kind of alternative of the conventional one without emphasizing the value of it, right? Rather than halal, right? Okay, it's halal, then what, right? You, if you see so many also, just like have a survey in Bandung or in Jakarta, and then ask 100 people, like you know, at your age, for instance, or 100 students in ITB, or 100 Muslim students in Universitas Indonesia, for instance, just for a purpose of comparison, right? How many of them still drink alcohol, right? Probably quite a bit proportion of them, right? So this is just the same. Being, you know that alcohol is haram, you know, not necessarily, you know, make you not consuming it, right? There are like, if you already literate, there are another layer to actually obtain it, right? Alcohol is a bit different because it's like quite stark in the sense that it's clear alcohol is prohibited from Islamic perspective. But in Islamic finance, when you have conventional, so alcohol is prohibited, so you should drink like a orange juice because orange juice is different from alcohol. It's not necessarily more healthy. I'll just drink like a water. Uh, Water is also not, the gallon water is not good as well. I mean, so water versus alcohol, right? You can say exactly that water is halal. That's first, and the second one, water is better than your alcohol. If you would go a bit, different than water, probably Coke, right, or sparkling water, for instance, right? You have the sensation of that soda, etc., right? Still halal, for instance. So the one who actually learn about this knows the difference between alcohol and between wine and, for instance, water, right? And then they know, right, from the from science that water is better than wine, right? If you consume wine too much, you're going to be in trouble, right? So given this, some people still consume wine, right? In Islamic finance, many of you cannot even tell the difference between Islamic finance and conventional finance, right? First, when you are told the KPR, the mortgage, the conventional mortgage is prohibited because of interest rate, because of the riba, right? And then this is the alcohol, and then you offer the water, right? The Islamic finance alternative. But this is murabaha, right? If the water versus alcohol, you can tell the difference by just seeing it. The murabaha and the conventional mortgage, you cannot tell the difference actually, except if you go through the contract, right? Right. So it's not to mention that the pricing is the same. Sometimes the pricing is higher in Islamic banks, right? Sometimes, right? So it makes people just, have an inertia to actually choose Islamic alternatives, for instance. So again, I don't have a definitive answer for that, right? But it's a very good question. If you would like to have a research about this, I fully support. This is a very good research question. But I can think of a few possible explanation of why it happens, right? And then Tomia Arisandiko, it's pretty hard to implement Islamic economics because I foresee my company as of today and need to get a loan as a I made my office as a collateral, and the loan that the conventional banks gave me is far higher than and I need X amount of budget, and the sharer cannot provide that, even though the riba pretty high. But I have made a calculation with the income the company can be paid next month. I cannot go through an investor because the owner of my company disapproved that. Can you give me any advice to solve this problem? The answer is no, I cannot. So yeah, I'm sorry to disappoint you, but of course, there are so many theoretical kind of solution for that, but I completely understand the practical solution is not easy at all, right? Because the base of our Islamic financial institution is not that big yet. For instance, if in terms of Islam conventional finance, if one provider give you higher rate, you can go to another provider that give you lower rate, right? In Islamic finance, right, in Indonesia, for instance, there is only one big corporation, banking, right, that is big enough to actually offer a particular amount of money, right? And then I agree in investing through investor is not also easy, right? To get, right? So I think but there with these difficulties, if you actually pursue something not only because of rational kind of arguments, but also moral arguments. And this moral, we are talking about, you are expecting a better world, not only in this world, but in the hereafter. The satisfaction is not only the utility, if you like, not only right now, but in the hereafter as well, right? So that in a way is again preference, internal preference that you can have, right? But again, in these circumstances, in the current circumstances, I can understand the frustration of of business when we are talking about getting loan or the likes from Islamic banks, right? Yeah. So because I only have 30 minutes left, yeah, syndicated Islamic credit is there. Dr. Lukman will answer will enlighten us later on about that. So I'll just want a quick because I know I I run out of time for this. So this is just the current progress of Islamic finance. So let me, yeah. So I don't know whether you already have the slides, but if you don't, I'll give it to you after this. So this is just to show you the progress of the global Islamic finance. This is Islamic finance growth and asset distribution, as of course, it's always increasing positively. Then the value by region as per now, of course, the Gulf Cooperation Council and Southeast Asia are leaders on this, including the Sukuk issuance, and of course Islamic banking. And again, Islamic banking is still the biggest proportion still comes from Islamic banking itself. Then you have here, this is as per 2022, right? The share of the global Islamic banking assets. Indonesia is still 1.9%. Malaysia is much better, 11.2%, right? Of course, Saudi Arabia and Iran are there because Iran 100% are Sharia, and the Saudi Arabia have the biggest, banks, right, combined, right, there in their particular country. But you also have this the share of the Islamic bank to total banking industry per country. Here you can see Indonesia there 6.7%, probably increasing a little bit now, 7 point something. And then if you see here, of course, Sudan is still 100%, but I think in upcoming years it's going to be decreasing because of the permissibility of conventional banks to be operational again in the country. Of course, Malaysia there is 31.5%, almost 40 probably right now. But we see this progress. This is the more what you call including the qualitative probably indicators, right? Islamic Finance Development Index. There, Indonesia is number one. Sorry, number three. Of course, Malaysia is number one. Before Saudi Arabia is there. So this one, Muslim population, I think now Pakistan is the one who have like a most Muslim population in the world. So I mean the base of the uh, consumers are very big, and it's there, right? So this is global indicators as well. So I won't go one by one. My point here is that the Islamic finance industry realize that it's not only about Islamic finance that we need to develop, but also other sectors, other industry, including the halal food, Muslim-friendly travel, modest fashion, pharma, and media and recreation as well. Because at the end of the day, they all use the money coming. I mean, they use the funding from the Islamic finance, and then they also actually financing Islamic finance itself. So it's very very you know interconnected actually, right? And then the market for Muslim population is very high as well. So this is just a glance in Indonesia, right? So you have this Islamic finance 10.16, and then Islamic banks 6.74, capital market 17.37 is there, partly because we have the sukuk, right? A quite big sukuk market in Indonesia. Then yeah, this is pretty much the details. I won't go further, but my point is that in here, so as we mentioned before, there's of course a deviation between the ideal that we would like Islamic finance to have and the you know the practice for many obvious reasons. We can talk and make one more courses, one more set of courses, right? Talking about this deviation from ideal to the practice and why it happened, etc. But when we are talking about that, one of indication is that the structure of our Islamic finance product is skewed to the um, murabaha and its derivation. Murabaha, inna, and tawaruk is one. They are in one category, right? But murabaha, some say, is much more better, right? Because the tangibility is still there. The link between the financing and the real sector of the economy is still there. But for tawaruk or commodity murabaha, it's no longer there because the assets is only for what you call um, the formality, right? For instance, here if it's Islamic bank, right? So if you're customers, you need actually you need money. You don't need any goods, right? Any commodity, right? What happens is that the Islamic bank will purchase a commodity from the third party, and then the Islamic bank will sell the commodity plus profit. This is just like murabaha, right? But the difference is that the customer will then sell it straight away to the third party as a buyer, right, in the spot price, right? So the customer only get the spot price, but uh, needs to actually repay bank with the cost plus the profit in deferred payment, right? So this is like organized tawaruk, organized community murabaha. What happened is that it happens in only one click, right? Or 1-2 clicks, right? few minutes it happened. How come, right? You transfer like a commodity from one to another, right, in one click, right? If it's really happened, right? The answer is that because it's not really happening, right? It's only in paper, if you like, not really in the tangibility of the transaction, right? So that's why this is very a huge issue, and then so many jurisdictions, so many countries utilize this tawarruk because the easiness of it, right? Any needs can be satisfied with tawarruk, right? This is just like a synthetic of loan, right? Another issue is that the convergence, right, between the pricing of conventional and Islamic finance, right? We used to have the IIBR, Islamic Interbank Benchmark Rate, right? Issued by Thomson Reuters, reported by Thomson Reuters, approved by, of course, Sheikh Taqi Usmani as well. But so many research, not only from my research, show that they are converged with the LIBOR or any other interest-bearing rate. So that tells you that there is no distinction in terms of the pricing. Not to mention that the price is in aggregate higher than the conventional one, right? So it's just the same, but more expensive. So it makes selling it very difficult. It will be very much different if the structure is different, not the same. If you have different structure of Islamic financial product, and then you sell it by using your own pricing, and somehow the pricing is higher than the conventional one, like the best customer, the clientele that actually really want that will be okay. Why? Because they seek for instance, quality. They seek for like a premium service, meaning that screening, so that it allows them to to actually follow still Islamic value, Islamic morality, etc. Right? But the question is that not only the structure is the same, right? The pricing is also the same, but the rate is higher, right? It's a disaster. It's a we need to really think of how to have the better structure, better pricing, better positioning for Islamic finance institution. And then if we see the pricing with the real sector kind of index, if you like, we see also the distinction here, right, from one and another, right? In terms of equitable distribution as well, for instance, my paper again with Professor Shahid, who will be presenter as well later on, show that there is a positive association, if you like, to the very least, between issuance of sukuk and income inequality in countries, right? In OIC countries, right? Suggesting that the bigger the sukuk proportion in that particular country, the higher actually the income inequality there. It's not good from the Maqasid Sharia perspective, of course, right? So why to sum up, if we are talking about borrowing this sociology theory, right? It's like isomorphism, right? So the tendency for one organization to mimic another organization, right? The question is which one is more dominant, right? There is like a mimetic uh, isomorphism, where organization mimics successful or well-established models to gain legitimacy and reduce uncertainty. many papers talking about this mimetic isomorphism as, to explain, right, the phenomenon of Islamic finance itself, right? Or it can be also coercive. Organization mimic one another due to formal or informal pressures. In Islamic finance, sometimes we cannot, you know, we cannot, be we cannot offer a unique model because of the regulation, right? Banks, for instance, cannot have the real inventory, right? That's why murabaha in its true form cannot be done ideally, right? Because bank cannot have the inventory there, right? So that's why they need to tinker with the model. Because of what? Because of the regulation. So the coercive isomorphism is also there. What is still missing is that organization imitate following certain norms or standard. So hopefully it's not, meaning that if it's happened, right? So we actually consider the a conventional way of financing as a norms, right, that we need to follow, right? It is not. We have different normative arguments, right, that we need to follow. If we follow our normative arguments, so it's not going to be isomorphism because it's going to be completely different with the conventional way of banking, right? So this is um, you can think about it. Which type of isomorphism do you believe best explain the evolution of Islamic financial institution and products? But many, or not many, a very good paper talking about the mimetic isomorphism, right? And then now let's think about how actually academy can be actually a backbone for that, right? So in Islamic finance, unfortunately, we miss the forward-looking research, right? That can help the industry. So partly, Islamic finance academy can be can I mean have part to blame as well, right? Because we don't offer really, you know, satisfying arguments for the industry, for instance, for advancing the industry. As we know that finance in general, mainstream finance, were formed by so many Nobel Prize winner contributions. Like for instance, of course, first by Markowitz in 1950s, right? Optimum portfolio theory. And then we have Sharpe, right, talking about capital asset pricing model. Even though those models might not really explain what happened in the market, but they tried and then they established a very good, theory there. In capital structure, we have Merton and Miller, right? And also in option pricing, we have Souls, Merton. Of course, we should have Black, but he didn't get the Nobel Prize because he died already before 1997, right? But also we have the efficient market hypothesis of the pharma and then behavior finance of Schiller, and of course the tools to to debate there with the Hansens, Lars Peter Hansens in 2013. Though they got the Nobel Prize winner because their contribution is really still not only academics but also the industry and the practice. The question is, what about Islamic finance, right? We of course, this is very high, you know aspiration, but we need to really think about this one. This one. 1 minute. Can you identify forward-looking research that has become the backbone of the current Islamic finance practice? 1 minute. I hope my battery is okay. Okay. Any idea? Yeah, because I also find it difficult to find such a research, right? We have, of course, few good research. I'll just mention few of them and let's try to identify the direction of those research, right? So yeah, this is just a few of them, right? So in just yeah. So just if you like for a context in mainstream finance and economics, we have in the UK we have the ABS, Association of Business School, like a rank for the best journal, right, in Islam in finance and economics and many other. It's basically business, right? If you see here, we have quite good numbers actually of papers talking about Islamic finance in Journal of Management Studies, which is 4, rated 4, and H index, if you go to the Scopus, SJR, is 200, more than 200, right? We have Gumusai. By the way, Gumusai also has, few other publication, which is really, really good, right? Regarding religiosity. But we are talking here about he actually examined, they examine how actually the institutional complexity of the Islamic banking in Germany, right? The emergence of Islamic banking, how it emerged, right? It's published in the 4-star Journal of Management Studies, right? Myself and my co-author, again, Professor Ibrahim, who's gonna, also present later on. We talk about how this business model of Islamic banks needs to be improved, right, in order to address the moral and ethical arguments of Islamic finance, right? In other, journals, in Journal of Business Ethics, Professor Mehmet Asutai has few papers also there, right? This one is about charitable in Islamic stock market, right? About the Maqasid Sharia in framework for assessing the Islamic banks. You also have this for instance, Boone and Ozan, right, in organization science, which is very high, the highest probably up until now, right? Talking about the opposition logics again in Islamic banks, right? And many other things, right? But if you really see which one is talking about, or proposing business model, innovative model for Islamic banking and finance, is very few. Many of them are empirical in the sense that they try to actually examine, what happened with Islamic banks without actually paving the way of the industry. How should you react, right? So this is things that we need to actually address together, right? From the math and of course statistics point of view, math, especially, you have the capability, you have the what you call the necessary tools to actually help industry better structure the financial instruments, for instance, and then with its payoff as well, and with its pricing as well, right? So the distinction between one, which is Islamic finance, and conventional finance can be seen clearly, right? So if you see here, the finance journal is only Islamic banks and investment financing. This is Agarwal. It's very old, 2000, right? Journal of Money Credit Banking, right? It's a theory paper talking about asymmetric information, and then it's also Professor Shahid's as well in Journal of Corporate Finance is there. It's also a theory paper talking about the opacity, asymmetric information and agency cost of that. And also, this is Abedifar in 2013 review of finance. They are talking about the risk in Islamic banking. This is empirical, not theoretical. Right. So there are so many research questions can be addressed, right? One of them is how to improve actually the industry to the better structure of the model, right? For instance, me, myself, and Professor Nofriana here also have this kind of idea to restructure, revisit the structure of Sukuk, for instance. How can we improve the structure of Sukuk and bring about different pricing that is more in line with the structure of Sukuk itself, right? So this having a good pricing, optimum structure, genuine business model, it can actually advance the industry in my opinion, right? So, but of course the gap is there. We need to be very much multidisciplinary in order to address that, right? Of course, this also includes not only ethics, not only finance, sociology, organization, but also math, right? Is very important here, especially to actually have, like I mentioned before, this pricing, optimum structure, and genuine business model, right? So that we can advance the industry to be actually in line with what is the purpose, what is actually the objective of Islamic finance. I know I'm well aware about the time. So, but of course, there's a challenge, right? The first one is from the internal. We are sometimes we are too narrow, but too shallow as well in terms of expertise. And then there's an inertia for innovation. We tend to like roman this is should be a romanticization of the past, right? We say that, oh, the past is, the murabaha musharaka mudaraba is the best possible transaction. Yes, during that time, but now it might not be, right? So that's why innovation is very important. Then we also sometimes reluctant to fight in the mainstream battlefield, right? Mainstream journal, right? We try to go to the Islamic journal, which is fine. But if you would like to be more, recognized globally, we need to fight in the mainstream journals as well. Of course, there's also external challenge here from, of course, barrier from the mainstream establishment is there. They tend to reject the paper talking about Islamic, etc. Right? The bias is there, and then when they tend to actually encourage multidisciplinary work, but when it comes to the publishing, it's also difficult to get published when you are multidisciplinary, because the reviewer is pretty much, again, narrow in the expertise, not multidisciplinary. So that's also there, right? Lastly, when you already have this idea, let's engage, right? First, engage not only in one institution, but with different institution like this. And this course is very good. We engage from one university to another, even one country to another, right? Which is very, very important. But we also need to actually have collaboration with non-academics, right? With regulators, investors, managers, philanthropists, clients, right? Collaboration and interaction as well, because the feedback loop is there. When you have the theory, it comes from practice, and then the theory can shape the practice, and the practice can be, again, we can learn from the practice to have something different in academia, and then again implemented by practice, etc. So the feedback loop is there. We need to have this climate of a science-based development of Islamic finance, so that we can advance the industry, right? So again, my point in this presentation is that Islamic finance has been gone through a lot, right? More than or almost a half decade, or sorry, half century, right? Islamic finance have been, contributing to the have been integral to the economic in general, which is very, very good. But we need to move forward, right? How the academics can contribute, right? By doing our best, construct the good structure of the product, the pricing, etc., the genuine business model, so that we can shape a better, um, you know, uh, financial institution, financial instruments, right? That is in line with uh, the ethics and morality of Islam itself. With that, I conclude. Thank you very much. I don't know if we still have time to question and answer, but thank you.
Okay, thank you, Dr. Wahyu Jatmiko. Maybe we have one short question. Okay.
Yeah, everyone is bored with my presentation, so I think it's time to conclude. Yeah, I mean, Dr. Lukman mentioned about few other papers from the Riggs Marsban, and then Puspita as well, Schiller, and then, as I mentioned in my slide, it's non-exhaustive, a list. So many other good papers, of course, in Islamic finance. I couldn't fit it into one slide, but the point is that we need to have more that can be. It's at the level of Nobel Prize winner kind of research. So probably Dr. Lukman will be one of them, but we together we can do that.
Okay, thank
Okay,
you. Yes.
right.
Thank you, Dr. Wahyu Jatmiko.
Yeah, thank you for having me. Yeah.
Now, before we conclude our session, I would like to remind everyone about tomorrow's session. We will begin at 9 a.m. Western Indonesian time with the with Dr. Lukman. With the topic is about basic of Islamic microeconomy. So please ensure you arrive on time. Please ensure you arrive on time so that we can start promptly and make the most of our day together. And don't forget to present. Please. Okay. Please complete the form that I send you by Zoom chat for your presence for today's session. And before we conclude all of our session, maybe we can take last for the picture with Dr. Wahyu Jatmiko. So I will invite you to open your camera to take the picture. Okay, please open your camera for the photo session. Okay. Okay. I will to take the picture in when I count 1, 2, 3, and I will take the picture. The first one, 1, 2, 3. Okay, one skin. 1, 2, 3. Okay, thank you everyone for your participation for this session, and don't forget to fill the presence form in the chat, and don't forget for tomorrow session at 9 a.m. Western Indonesian time, and the Zoom meeting link will be the same, and I will remind you tonight. Okay. Good night, everyone. Thank you.
Thank you all. Bye.
Thank you, sir.
Mm.